Yeah, so welcome at our Gig Investor Club meeting. It's the 28th of August, Sunday night, just after 7. And tonight we're going to just go back to or revisit our Gig Investor Club, the purposes for why it's there, how it fits in with the whole gig movement, and then just touch on some of the investment opportunities that are there right now. All right, so Gig Investor Club. So the important thing of understanding what we're trying to do in GIG, and again, for new people who are joining us for the first time, GIG stands for Generational Inheritance Group. It's a program we've been developing since 2008. And one of the focuses to move people from struggle to significance is to make sure everybody understands this cash flow diagram. And we discuss it in more depth in the budget video budget exercise, but it basically says we are what we think. And the E quadrant is on the left side, and it says when you think like an employee, you talk to other employees, you get your advice from other employees, and you earn your money out of being an employee. But effectively, you are selling time. And when you lose a job, then your ability to sell time has also left. Then some people say, I'm better off. I don't have to wait for a job. I create my own job, and that's the S, the specialist. But you're also selling time. It doesn't matter how good you are, and I know of quite a few people in professions that, like medical doctors, but after a while they get older and older, but if they stop, they lose their source of income. So you're still selling time. The ideal place to be is on the right-hand side. So B stands for Business Builder. And this is where you learn the skills to build a business, to systemize a business, to give it structure, to duplicate time and money. And if you do it correctly, then you can apply it in any business. And that then becomes a stable, growing income source to eventually move you into the I, which stands for investor. And it's an investor mindset which says, I make money work for me. I don't work for money. Now, the good news is, even before you are at the B and you're currently at the E or a S, you could still start to learn how to think like an investor, or as a specialist person to think like an investor. And that's what we're going to focus on a bit tonight. So in GIG, our whole GIG support program, even the bank, all the products are designed around how to move you from the left, where you are selling time, which is not transferable to the next generation, to building systems, structures, businesses, which is transferable to your posterity. And on the B side, in time to come, we do more information on what can you do there. One way to do it is become a legacy coach, start your new life business. These are some ideas. But tonight we're going to focus on the GIG Investor Club. So to understand the relationship between GIG, the CFI, and hopefully in the future we can call ourselves a cooperative bank, and the GIG Investor Club, is to understand that the bank itself is regulated by the South Africa Reserve Bank, and that's where we protect people's money, and your money is safe, and you can from there make use of any of the products that we make available. But we have, and the products that are available to you are things like the fixed deposit savings over 6, 12, or 24 months, where your capital and interest is guaranteed. And with that, we buy retail government bonds. You can have a 32-day call account where current interest per annum is just slightly over 5%. Then a key for the future is this number 3, loan linked share interest-free loan account, where whatever you put into it, after 12 months of membership, you can start tapping into this pool of funds, and your own money becomes a lever or leverage that if you have 10,000 in it, you can up to 30,000. So that's one of the things there. But then 2 years ago, just over 2 years ago, we've started a club. And to belong to the investor club, you have to have an investor account with GIG. Now, it doesn't cost you money. It's part of your membership fee every month to have access to all these accounts. But then the idea is that you you leave your money in this account while you are searching for good opportunities. And now, because you are you have an investor account, we then bring to you as part of the investor club opportunities that might be something that you want to invest in. So it's not compulsory. We cannot invest on your behalf. It remains your choice. You do the due diligence. And we do it through, we've got a panel of specialists that look at the opportunities. We look at entry level, exit level, liquidity, return on investment, history of the company. And members then invest their own money and they take their own risks. And some of the things we will talk about tonight would be things like the cattle feedlot project, gold, and Forex. So to move us further into the meeting, tonight I want to talk briefly about the gig investment philosophy. Then we'll discuss some current investment opportunities, and then just some ideas on how to develop your own investing strategy and future opportunities. So in terms of the investment philosophy, we're going to talk about the stages of the investor journey, and then just some general guidelines that we would like to leave with you. Now, the stages of the journey, in gig, we talk about your journey from struggle to stability to success to significance. We define struggle is where you don't have good cash flow. It's constantly a minus. Stability is where you've sorted it out and you now got a stability, a cash flow that's plus. Then we talk about success is having 3 or more sustainable income streams. Ultimately, we talk about significance, and that's when you you've started or have a fully fledged family office, and we'll discuss it just in a little bit more detail. Right. So what do we mean by the gig investor struggle stage of the investor journey? Well, open up your gig investor account and then try and start as soon as possible with money. But we say, just for definition's sake, until you have 12,000 Rand spread over various investments and you have built up about 4,000 Rand in your LoanLink share account. Remember, this is what you can then leverage up 3 times. You are still part of the struggle journey, but that's good, because while you're there, you can participate already in the options that we have: cattle, Forex, gold, and even some of your own opportunities. And we say that's where you pull your money, and that's crowdfunding. Once you move past 12,000 and you start building towards 100,000, you're now on the stability course. It's still crowdfunding, but in some areas you could also what we call participative funding, where you and a couple of friends could pool your resources and invest in an opportunity. So there we say build up to having at least 10,000 in your LoanLink share, and you still have access to all those opportunities. Then once you have over 100,000 and you've got your 3 or more growing sources of income, we refer to you now as a sophisticated investor, which basically means you understand the language of investment, you can assess risk, and you're willing to take some risk in certain areas, but you understand when to take risk and when not to take risk. And you stay in this phase of it until you've built up 1 million in assets spread over various investments. And when you have about 100,000 in your LoanLink share, so that you can participate still in all the opportunities, but now with that kind of money, you can buy your own property directly, or you can buy shares in a business directly. Then ultimately, if you have 1 million plus and you've got your 3+ income streams, if you then start family office, and family office is where you then have your own team of working for your family fund, then that's what we mean by the family office. So this is just the stages of the investor journey. Now, further considerations. While you then in the struggle phase of investment, what should you focus on? focus on increasing your income. So in time to come, we will tell you a lot more about how you can build a steady growing business out of New Life, or even look at your current hobbies and see how you can commercialize it. Then mitigate risk. Make sure you have a will and testament in place. Look at your short term. Let's look at maybe if you already got short term, let's relook at it. Maybe you can save a couple of rand on that one. And if you don't have funeral cover, we highly advise you to do get funeral cover. And you can do that by just upgrading to our Wealth Builder membership of 140 Rand a month. And during this time, start knowing who is your gig team. Your legacy coach is a very important person. He's the person that know what's happening and how to access you to various products and services. The wealth coach is basically a financial advisor, but fully trained in the gig program, and it's a regulated person. And then you may need some specialists. Could be that you need to get your tax in order. We can give you an accountant, or if you're over indebted, we can give you debt counselors. And these are all people that we vouch for, who understands the generational understanding. Then if you're in stability, focus on increasing income. We've already mentioned it, but we certainly advise at this stage to also become a legacy coach. A lot of doors will open for you from there on. You mitigate risk by having life cover, disability cover. Make sure you put something away for education for your children, and start looking at getting into a medical aid fund, or find a way to pay for that, because that becomes a huge expense in our old age. Then in the success side, focus on stabilize and protect your income. This is where you build your team, where you sit down at least once a year with your accountant, your lawyer, your advisor, your business specialist, and so forth, because having 3 or more sustainable income streams probably mean you now become a very strong person in the corporate world. And then ultimately in significance, and okay, mitigate risk. This is where we take out key person insurance. So what happened to the person, the key person that's critical to the business? If he dies, then have backup there. We can, for businesses, help with employee benefit programs. We can give you access to overseas investment. And that's a time when you certainly have to sit down and do succession planning. And then ultimately, focus on succession structures within your family office, and appoint the gig family office as your specialist. All right, now let's look at some general guidelines. In our investment guideline, let's look at risk versus liquidity and return on investment. So ROI stands for return on investment. So it doesn't matter how much money you have. If you take whatever you currently have in assets, that includes if you have a house that's paid for, or a car that's paid for, whatever. So assets, but the definition of assets is it is producing income. So just in the house you live, understand from our budget exercise, that is not necessarily an asset, because you still have to pay upkeep on the house. And also the car is not necessarily an asset. But what is currently producing income for you? Then whatever it is, on an annual basis, see how close you can get to divide that investment is up between 40% for high liquidity, low risk, and high liquidity means I can access my money very fast, between 1 to 3 months, 48 hours, 3 months call up. And because it's high liquidity, you can't expect big returns on it, but try and get some returns. And what I've just made here is some calculation. Let's say you can get that kind of high liquidity, low risk kind of investment, 10% per annum. So 10% per annum with 40% of your money will contribute 4% net results to your overall growth. Now, what would be examples of this? Our 32-day call account in gig gives you currently just over 5%. Then through Gig Wealth, which is our financial services company, we can give you market investment, give you anything from 5 to 11% per annum. And then physical gold. So physical gold is definitely highly liquid and it will keep its value, but on a day-to-day basis, it will go up and go down. But on a year-to-year basis, it can give you on average almost 10% growth. So that's a typical example of an asset class. Then 30% of your money to be put in less liquid, still low risk, but you don't worry to have it fast. So you give yourself 6 to 12 months call up for that money, and you aim for 10 to 20% growth on your money. So if you would have got 20% per annum on that money and 30% of your money was there, then that would have added 6% overall to your growth of your assets. Now, a typical example in gig would be the 6 or 12-month investment or the fixed deposit. So currently on 12 months with gig, I think stands on 9%. The Gig Investor Club, which we will touch on tonight, gives you on average in the region of 14%. So there are investments out there, and soon we will add another one here. Then in terms of the next 20%, less liquid, you can take higher risk on it, aim for 20% plus per annum, and understand that your money might be tied up, especially if you put it into, let's say, you and a friend starts a business. And you're passionate about what you're doing, but if you need the money, you can't just extract money from that business. It's still growing. But if you could get, let's call it about 25% growth on per annum over time, and put 20% of your money there, that could add up to about 5%. And then ultimately, 10% in high risk, medium liquidity. And if you do, so you allow that if you have to lose this money, you lose it. But what if it works? So don't put it all in one risky venture. Spread it over different ones. But Forex trading, for instance, would be in that bracket. And it could be possible in some cases to earn 50% plus on your money. All right, so that just says in your own hands, looking after your own money once a year, with this kind of background of how to structure it, you could grow your own money by 20% per annum. And obviously, I'm not taking tax into consideration here. I'm just talking generically. So, a general investment guideline. When we look at risk capacity, when you talk to any financial advisor, it would normally do an exercise with you to determine what is your appetite for risk. And then you have three kinds of appetites: conservative, little or no risk; moderate, I'm willing to take some medium types of risk; growth, then you must understand it's high risk. You can lose it all, you can make it all. And then just in age brackets, typically if you're 60 years plus, you can't start taking risks now, because if you lose your money, you have nothing. You don't have another life ahead of you to start all over. 40 to 60, become less risky, but you can take on average moderate risk. And then the young guys can take high risk, because if they lose it, they can still recover. Now, this is not set in concrete. I know a lot of people 60 plus, because they understand investment and they can quantify risk. They are in asset classes that for an outsider it might look risky, but the way they manage it is actually not risky. So examples of conservative investments, again, would be the 32-day gig investment club, the 6 or 12 or 24-month investment, the 32-day account, the fixed account, then market investments through gig. We can give you conservative income funds that can range from 5 to 10% per annum, and then physical gold. Moderate kind of risk would be the cattle investor club. One of the new ones we're bringing in shortly is the debentures. I'll tell you more about that. And then within gig wealth, we have access to conventional market investments, but they are moderate with the potential of growing slightly higher. And then growth would be shareholding in your own businesses, the Forex, and so forth. So another thing to just keep in mind when you look at investment is the importance of diversification, because no asset class is guaranteed to always work well in a specific time period. So there are four ways of, what do you call it, diversification. First of all, it's across asset classes. So an asset class would be gold as an asset class, livestock as an asset class, property, equity. So it's then good to have a little bit in everything. Then within an asset class, it would be property. And a good example is we have a guest house and a conference center here in Fourways. But when lockdown came, it affected the whole industry. But people still needed, and offices, huge knock, but people still needed accommodation. So it could also be that, so in that case, with its property is then the asset class, but maybe have some rental units over and above money in offices or shopping centers and stuff like that. Or it could be in the same asset class, like property at the coast is buoyant over holiday periods, but less buoyant over other times of the season, where it's maybe if you can have property in the heart of the city in like an office or accommodation, it could be good all year round with a bit of a lag over Christmas period. So that's what we mean by within assets. Then across markets, across countries and currencies. So that's where offshore investments comes in. But normally you only worry about this when you really have lots of money to start protecting. And then across time, and what we mean by across time is don't do nothing for 60 years and then at 60 think with one lump sum you're gonna make everything right. The key is where you're at with what you have, the little bit that you can invest. Buy gold now, because a year later it will be more expensive. 10 years from now, more expensive. The same holds for property. Same holds for businesses. So by making small, regular investments, you're getting the growth and effect of building consistently across time. All right, so those are just general investment guidelines. So quickly, we currently are involved within the Investor Club. And again, do understand that the Investor Club, although it operates with members of GIG, is nothing to do with the GIG Bank itself. It's outside, it's individual members of GIG deciding where to put their money. And tonight there's a development on the cattle feedlot that I'll tell you more about, forex trading, gold, and then conventional would be what a typical financial advisor would be able to offer you in terms of all the investments and the various funds and retirement and annuities, etc. All right, so cattle feedlot. What we mean by the cattle feedlot is we have teamed up with two different entities, which is now called option 1 and option 2. Up till now, what I now call option 2 was what we had for the last 2 years. It's an entity called SV Capital, and your money is tied up for an investment period of 12 months. Then every second month, which is now Monday is the deadline for this intake. Then for as little as 500 Rand, you can invest. And then 12 months later, you share in the growth, because they purchase cattle, they grow cattle, they then slaughter it, sell it off, and you then share in that. And in a typical 12-month period, they often repeat the cycle twice. Good news is, because I like higher liquidity, we have managed to get exactly in the same asset class, with the same sort of historic returns, with the same minimum investment, but no longer worried about every second month. You can now invest on a monthly basis, and if you don't want to invest, you don't have to. But whatever you invest in, money that now comes in at the end of August will then work from September onwards for 6 months, and after 6 months, your money will then be released, and you share in the growth. And again, this entity also received or earned on average 14% plus per annum. So over a 6 months period, that could grow your money by 7%, just as an example. So I personally prefer, for the same risk, shorter liquidity periods. All right, so that's cattle feedlot. This is then operated through the Smart Investment Stokvel, and this is operating through another entity. But if you need help, you can then contact Koen Botha, and his detail is there at the bottom of the screen. Then in terms of gold, we have made it possible since last year that you can, if you can't afford a full ounce of gold, which is about 33,000 right now, but you have 1,000 to invest, you can then invest. You can contact Jason Riley. You decide how long you want to hold it. What he does, if you buy a full ounce of gold, you can then take ownership of it, take it home, leave it in your safe and do what you want with it. Or you can put it in the vault of GIG CFI. But it's your money. You can even borrow against it. It's recognized as a very strong asset class. But what if you can't afford a full ounce of gold? You can then buy fractions of it. And let's say you only have 1,000 to invest. We will then wait until we have about 33 or 34,000 of all the investors available. We'll buy an ounce of gold. There's 32 grams in it. And you will then be allocated your grams for the amount of money. And that grams, we don't guarantee the value of your gold. We just say it will always be the spot price on the day, minus the fee of buying or selling. But then as time goes on and you a gram here and a gram there, and over time you've got a full ounce of gold, you can actually ask GIG then to give you your full ounce of gold. So it's physical gold. Or you can start trading with each other over time. I buy something from you and I pay you in fractions of grams of gold and vice versa. So that's where we're going in terms of physical gold. And then we've 6 months ago started with trading in currency pairs. It is high risk. You can lose it all. You can make good money there. Historically, we've averaged about 15% per annum. But if your money comes in, minimum 1,000 Rand, it's tied up for 6 months. And then after 6 months, that intake that was ring fenced is then calculated. They share in the growth or the loss, and it's paid out, and you can decide to reinvest or continue. If you have if you want more information, you can contact Audrey Mathabula at the information at the bottom of the screen. Right. Then conventional investments, that's typically, if you talk to any financial advisor, that's what they would do. They will give you access to some funds, and there's thousands of these funds out there, access to various investments, and they're pretty much the same all over, with a bit of a difference here and there. We have access to the best of the best, but that's now for serious people. So if you retire and you have to then put your money in a retirement fund, or if you're busy building up a retirement fund, that's when you start talking to us in terms of conventional investments. And there you can talk to Muzi Kubeka, and that's when wealth comes into the picture, and that's the sort of historic growth that people can achieve. All right, and then once you build an investment pipeline, guidelines on reinvesting of growth. If you start getting some substantial growth back from your money, pay a tithe. And when I say tithe, doesn't necessarily mean pay it to the church. Let God direct you where to give it. But it's money that you just bless someone with. Then pay yourself 10%. In the beginning, even if you just take your wife out for a milkshake, and then reinvest 80%. So those are just rough guidelines. And then ultimately, when it comes to tax, understand that tax is payable in the hands of the investor. And all the examples we've given you tonight is based on the principle that we haven't added tax into it because it's payable in your hands. Then just future gig investment opportunities. Next month, we will announce the PPO, the ventures. That's the same company that gives us also the monthly intake on cattle. They have another product then, it's called PPO. Pre-purchase orders is typically, all the big businesses use it. It's bridging finance. And let's say I've got a contract to deliver 1,000 cell phones to Telkom. But I can't, and it cost me 600 Rand and I sell it for 1,000 Rand. But I don't have the 600,000 to buy the cell phones. Then this entity makes the money available, purchase the cell phones, then have a profit deal. They get to collect the money from Telkom. So they de-risk the whole thing, and they can get, by taking profit, they can get higher money than if it was just rental money. And at any given point in time, they have over 200 such deals going for periods of not longer between a month and 3 months. So a history of also a year, good returns, slightly higher than you can get with cattle, and we'll bring that to the table next month. In future, there are people who are very professional in car trading, but it's very up and down business, but they're making good money and they also beat the market in terms of growth. Agriculture is becoming a very exciting development, and when we have the right mix of products and how to enter and exit and whatever, we'll let you know about that. Property, we need to grow the club to a few hundred members more so that we have a couple of million available, because when we do invest in property, we don't want to have the risk of bonds. We want to have it bond free. And then down the track, we'll also start having small businesses pitching to us, and who knows, we might find the next Elon Musk or Tesla or whatever business amongst this lot.